Hey guys, Marty with Options Unleashed. Welcome to the weekend update. What a week we had, January 9th, 2021. Um, an amazing first week we've had in many, many years that I can remember. Uh, I think pretty much every day this week was an up day. Let's take a look at the weekly SPYs. We're above this trend going all the way back, as you guys remember. Zooming in on this trend, we're just staying above this trend line. We had a little bit of a tail candle here, but what a strong week. We had a ton of news. We're going to go into it. We're going to cover some trades in this video. We're going to talk about maybe what we're looking at next week. And then hear from you guys in the comments, like what you guys would like to cover next week in terms of options, education, what type of videos do you guys want to see. Let's just get right into it. The spiders was killing it. Let's take a look at the ETF. The spiders were up, big this week again, in that trend line again. No weakness this week. What to speak of whatsoever. The IWM as well, just really strong performance on the IWM. We'll talk about that being, the value play outdoing the growth right now. The banks, let's take a look at the banks because that was kind of key with the kind of the twos and the tens and kind of inflation coming back in terms of the market kind of anticipating that inflation. The banks just have been on a tear since back in November. And these are the big banks, your XLF. And again, going back to their old highs at around the 30 area. If you look back, we scroll back on the weekly chart. Remember, guys, that on the weeklies, the high that the XLF has ever been is $30 right there. So let's draw a quick trend line here, and you're going to just see how strong that is. So the question is whether the banks are going to continue to push through this level. I don't know. I think maybe on the short term we can get a look above, but I think we're going to have a retest at some point. So the banks are almost done. I took JP Morgan off. I still have Morgan Stanley long, but basically took my JP Morgan off because I wanted to put that capital to better use on other trades. So, but that's good for the overall markets, right? They say if the banks can lead, that means we could potentially see higher highs. Although we're still in that very dangerous, if you zoom in here, we're still in this very dangerous ascending wedge, guys. So be careful in here. Anything can happen. I really thought we would get a pullback last week, but we just had too much news, too much good news in the market. We'll get into that a little bit, but just let's cover some more ETFs here, my ETFs view. Let's take a look at the some of the ETFs, like the home builders, really not doing well, right, relative to everything else. So the home builder is still stuck in this range, if you will. Let's look at gold. Gold had a breakout, and it's kind of had a really false breakout in here. It was off to the races. Everybody thought that we were going to get this pullback in stocks and flight to safety, and that kind of never happened. What happened was people just moved out of gold and right back into, they went into Bitcoin, they went into equities. Gold is not the trade in here. Maybe the miners are, but this is Barrick Gold, or this is the SPR, this is the Spiders Gold Trust, sorry, and just did not, this is the GLD, did not really move here. Let's see what else. The other ETFs that we want to look at, the retail trade, the XRTs still doing well, had a big week on stimulus, right? We'll get into that a little bit. And ARK Invest is an ETF that I'm following just because of Kathy Wood and Tesla and the different genomics and other things they're getting into. ARK is doing well this week, so this is kind of a barometer as well for those style of the sectors that are, the next generation sectors, if you will, including, 3D printing. We'll get into some of that and others. And then just lastly, EEM breaking out of its 50 high. I sold this back in the high 40s area, but kind of maybe interested in getting back in. Had that nice little breakout in here. The EEM trade doing well, now going all the way back. If you look on the weekly, it's going all the way back to 2007 highs. So it's getting up there as well. So the big news, if we flip over to here to our playbook, the weekend, we're giving the weekend update playbook. The Georgia runoffs were actually something that we wanted to focus on. I played a SPY put protection play on the Georgia runoffs news, and so here's the good news and the bad news, guys. So playing that protection trade, what did we see really happen there? The Georgia runoffs was really a non-event. The Democrats took the Senate. It looks like it was confirmed that they won the 2 Democratic seats in the Senate, which gives them pretty much control of the Senate, with Kamala Harris being the tiebreaker. They always say like what didn't happen is more important than what did happen, right? So everyone was geared up for the Georgia runoffs being negative to the markets. If the Republicans lost the Senate seats, 2 Senate seats were up for grabs in Georgia due to the runoffs. It looks like the Democrats confirmed the win. But what we had expected was everyone played protection on the SPY. I did down, targeting kind of a sell-off down to that 350. It's a defined risk play. I bought the February 19, 335, 350, 370 put fly. Just bought one for $2.80, expecting to make a good protection there, right? But we didn't get anything in that trade. It's not over yet, but the trade is losing money. We typically leave these on for expiration. We won't adjust this at all. But the news really is that the non-news is really more important than the news. The fact that the market just shrugged it off is kind of like really, really important. So this is kind of key, guys, that the market wants to go higher. So that's like a really important non-event. The markets looked past that. Value outpacing growth, IWM versus the if you take a look at the IWM versus the Qs, IWM is well intact with this trend coming up through here. It's just rocketing higher. So value outpacing growth. This seems to be the story it could be the story of the next several quarters. So keep that in mind, guys. The Qs still doing well. They had that little breakout here, but they're extended. Everybody knows they're extended. If anything, with Biden, the question now becomes, does the Biden administration come after the FANGs? Do they come after high tech? The stimulus, Biden, obviously expected to do that trillions plan, right? So this is good for value. We're going to see, we've got Powell behind us. We've got Biden behind us. The Powell put Biden with spending package. It's just all really good news for value plays. This is really going to be a stock picking environment. We even have the bond markets doing well with the yield curve, the 10s and the 2s. So you're not seeing an inverted yield curve. You're seeing a nice yield curve out on the long end. So you're going to see banks doing well, the regional banks doing well. It's just good for business. The question of the day or next week or this year is going to be, do we overheat? Do we overheat the economy, and do we have to they have to start thinking about raising rates? So things are going to get expensive, guys. Your Starbucks coffees, Starbucks, right? Your Starbucks coffees and your milk and your bread and everything, and cars and your computers and even your YouTube video, your YouTube channels are going to go up in price. Netflix, you name it, you're going to start paying more for things. So watch out for inflation, guys. That's going to have a negative effect on stocks if we start raising rates. But that's actually not a bad problem to have right in here. We probably need to have a little inflation. We probably need to see that the economy is coming back. The big negative news of the week was the Capitol riots. It was just a really bad, probably one of the worst events and images and things to remember that we're ever going to have besides COVID, right? COVID was bad enough. Now we had these riots that took place in the Capitol building while the senators were trying to still count the electoral votes. Just really bad for our economy, bad for our country. There's a lot of people that are saying, this should not surprise you because America is based on all these. America's based on independence and when people the freedom of speech and all that stuff. But the bottom line was it wasn't really a good week for us, the country wise. It wasn't good. We had a end of a presidential run that was that kind of ended on a bad note for most Americans, and and we're better than that. The U.S. is better than that. So that's all I'll say. It wasn't pretty. It's on the backs of people already being out of work. Already, small businesses are struggling. More riots, more people fighting and understand they want to voice their concerns, but the kind of the damage that's being done, and then obviously the aftermath of this, like Twitter and Facebook and others, banning President Trump from being on Twitter and things like that. It just didn't have to go down this path. But it is what it is. Like these Philadelphia Inquirer talks about, these things should not surprise you. We've had all kinds of things in the past, over the past 100, 200 years. We've had, major events that took place. But I think the difference is that most people are kind of getting at here is that by 2021, you think that we would eventually kind of grow up and we would eventually realize that there's, better ways of handling disagreement, or how you see the government, or how you view the government, or how you view different things going on. I think that when people say that these things shouldn't surprise you, I actually am surprised. I think a lot of people are surprised that we've come so far with respect to slavery and laws and things like that. The different movements that we've had for positive, success. You think that these things would not happen, but they still do, and unfortunately they still do. Let's talk about themes for 2021 that we're focusing on, just to remind everybody that the reopen trade is going to be huge, right? Travel is coming back. Industrials are in focus. Material science, 3D printing, EVs, growth versus value approaches. The stimulus is going to have a big impact on our economy, small business, right? There's where your growth plays are going to come in. The vaccine is huge, right? Expect more good news to happen on the vaccines. We've got Pfizer saying that the vaccine is potentially it's effective against the different strains and variants. People are saying too that I think Moderna is saying that their vaccine might be good for 2 years. So this is all, we're going to expect to see good news. Biden wants to use 100% of the vaccine inventory. These are all good things that are coming. And we even have potentially, I think it was Johnson & Johnson coming out with a vaccine soon. And Probably like better approaches of like transporting it, shipping it, keeping it cold, keeping these things cold, and also duration, like or number of shots that you need. So you might need only one or two. Well, you need two right now, but you might need only one shot in the future for particular from specific or particular uh, manufacturers that come out. So we don't, who knows, right? But we know this is a good thing. Emerging markets, bonds, and while you wait, you need to have your wish list. So things I'm looking at are Carnival Cruise Lines. I think that's actually one of the dumb money guys look favorites as well. Spirit Airlines is another one from Dumb Money again. Those guys, Chris, Dave, and Jordan. Those are great guys. I follow those guys pretty much daily, and they're good to watch. Expedia, I kind of missed that trade early on, but I had an option play on it. I closed it out for a profit actually this week. So Expedia is a good one. Disney, long Disney. It's like my number one or two pick, and continue to. I think this is going to double in the next couple of years on this. I put 140 stop on this, right? That's kind of the play, but I think it's basically a double. Again, these are all my opinion. I'm not a broker, and this is an investment advice. Do your own trades, but do your own research. But again, these are all my opinions. Macy still depressed with a lot of debt, but let's see. You'll see at least a 50 or 60% just on sympathy. Ulta Beauty, my number one pick for me, my opinion only, guys. And I'll be doing lots of videos on Ulta. We've got earnings coming up, 225 stop on that, but an easy double in the next few years. Apple will lead to higher on 5G. We've got some 5G plays as well out there. And then DDD, I own it. I sold that for 100% profit this week on DDD. So we'll cover that as well. And then, Amazon earnings coming up. We got Apple on the 26th. And these are like estimated dates, but we got Apple on the 26th, Amazon on the 28th, Google on 2/1. I think Josh Brown likes this, downtown Josh Brown likes this one a lot. And then hedges, I got the UVXY. I said here, don't worry about it until after earnings, but I already put a UVXY trade on. Got protection on UVXY. I've got 20 contracts of the January 29th, 12, 13 and a half, 15 call. Again, going out to the end of January, you can see where that one standard deviation move is. And stock is trading at 10. But this is basically a pop up to the 13 and a half range, targeting kind of this range right in here. If we get a pop back to this range, that's where that protection will come in big time. So a 10-cent, 10-cent call options for $200 protection will give you a 50% return on profit of $1,400 by the end of January, should we get any major bad news. DDD, just to show you in my long portfolio, this thing was breaking out to the upside. I bought it, and then it basically did a double, got 100% return in one day. I took it off. Not going to, when you get a gift like that, you do not look back. You take it and don't look back. Ulta Beauty is my number one pick for me this year. I own it long, and I'm trading options against it. So let's look at some option plays in Ulta that I'm continuing to play. Next week, this option is doing well. The you can see that this option is 50% of the money. I'll probably close these down on any pop, because I also own the stock long in my IRA and in another account. So we're long Ulta stock in several accounts. And just to show you what you're looking at right now, if you guys wanted to make a trade, we'll go into like how to trade, define risks. But if you wanted to take a look at either the selling a put outright or selling a put spread, a bull put spread or a credit put spread, which are both bullish. You can take a look at, you can go out 45 days. The IV rank is about 40%, IV percent is about 40% right now, which is a little low for selling premium. But keep an eye on this, guys. Earnings are coming. We talked about earnings coming on the on March 11th. And so when you're looking at the February 19th play, and this is before earnings, you know, so if you're looking at that February play and you're looking at that one standard deviation move down to the 85% probability of out of the money, that's the 245. So for all practical purposes, I was playing that 255 put, so you can still sell that for $3.10. So you can collect that $3.10 put for February 19th. And if you look at how to calculate really quick your buying power reduction for this type of trade, typically your brokers will take about 20% of the underlying, and then they will subtract from that the difference in the strike price and the stock price times 100. So let's just do a quick calculation on that, guys. If we bring up calculator down here, haven't really done this live before, but let's just do it really quick. If you want to calculate quickly your buying power reduction, and obviously the platform will tell you that too, but let's just do the quick math to show you how you can do it by hand. If the strike price, if the current stock price is about $310, you can take the 310 times 0.2 to give you that 20%. So the brokerage is going to charge you 62 times 100, $6,200 for that strike at the money for margin buying reduction, right? And then if you want to subtract the strike price, which is that, what we say it was 294 minus the strike, which is the 294 minus the 255 strike, is 39 times 100, so it's about 3,900. So you got your 6,200, I said, minus 3,900, gets you about a $2,300 buying power reduction for this trade. So that's an example of selling a put for $3, collecting $3.10 when the buying power reduction needed to do that trade. Unfortunately, we talked, guys, about the average implied volatility for like ULTA right now is around 40%. So it's not really a good play to be right now to be selling premium in this. There's probably better ways. You can buy premium. You can look at bull call spreads. You can look at a bull put spread wouldn't really do it for us with this volatility. It's not enough premium. But you would have to take a look at the chart, and you would have to kind of come up with where you think, you know, when you'd want to get into this trade and what type of strategy you would get into. I'm gonna get into more of these plays when we get closer to earnings, and the earnings are on 3/11 again. So that's ULTA Beauty. Again, we'll do more videos on that. Amazon, a favorite of the Dumb Money guys, Chris Camillo and those guys. We had this fake move to the upside last week before the new year, and then we came back. And so Amazon doesn't look very healthy to me right here. We talked about Amazon having this potentially diamond reversal pattern. If they come out with any news such that, if they come out with a spending news, or AWS, you know, didn't make as much earnings, you know, or potentially some geopolitical or regulation risk, it's not going to look good for Amazon. So I am not in the trade, and the chart just doesn't look good to me. We talked about two potential things going on here. There is so much of a coiled spring going on here. I can't imagine that this thing won't just pop as this pennant unleashes this energy. But I think you need to just watch Amazon. Honestly, if it got down before earnings, which are I think 128, if it gets down to that 29-30 level, you have to kind of take a shot at it at least. But we'll do more trades on Amazon. Just keep an eye. Let me know in the comments, guys, what you think about Amazon. Do me a favor, answer the question that I have that I've been asking myself is, why isn't Amazon already at 3,500? Why isn't it here? And when you take a look at Apple as a comparison, Apple has come down, has taken this little pennant right here, if you will, right? Apple has basically done it. They've taken this trade up to here, and they've coiled and moved higher, come back, they retested, and they're going to potentially go higher on the 5G news and the fact that the stimulus is just everyone's going to go out and buy iPhones, guys. But that's why I love ULTA. Here's the trick. I'm going to give you the trick in this video about ULTA really quick. Back to ULTA. And if this doesn't convince you to buy ULTA, I don't know what will. Not only is ULTA in this upside down head and shoulders pattern right here, we've got a little upside down head and shoulders, right? We've got this whole gap right in here. What I think is a convincing strategy for ULTA, the conviction that I have, is the fact that you're getting about $600 per child, right? And for divorced parents, right, you're multiplying that by 2. This is the secret, guys. So here's what's going on. The stimulus gives you $600 per dependent under age 17. So that means you're going to have a $600 parents are going to get that $600 for filing last year for that dependent. Now, if you were divorced, you got the check, but your spouse who if you have a shared custody agreement, the way I'm hearing that it works is in this year's tax return, if you didn't get to claim your child as a dependent last year in 2019, in 2020 you do, you're still going to get another $600. And the reason for that is the IRS didn't want to have to deal with split custody, shared custody, divorce situations. So the fact is that anybody under the age 17 dependents are going to get 2 stimulus checks. Why is that important? Well, because Ulta Beauty is where all these teenagers shop, right? So if you're going to get 2 checks, they're going to want to go and they're going to want to spend $600 on an iPhone. They're going to spend $600 on makeup and on Amazon. So you're going to get the spending. The TJ Maxx's, the Ultas, the Under Armours, the Macy's, the Kohl's, the XRT trades. These are all going to do well because there's a 2 times child for divorced parents. And I don't think a lot of investors are factoring that in yet. So I think that's kind of the hidden gem that I wanted to share tonight on Ulta Beauty. Let me know in the comments if you think that that's not a big enough difference, or if you think I'm incorrect about that information. So what else is going on? BABA this week was a big trade for me, or not a big trade, was a big kind of a letdown this week. We had news that Jack Ma was missing, and I sold puts, and then my puts were doing well, and lesson learned, I didn't take my puts off when I was 50% in profit. I just wanted to let them run, and guess what happened? The stock went back down, thinking that BABA was going to be banned from the U.S. was going to add BABA to the list of China trades, China symbols, tickers, where they would ban those stocks from U.S. investments. Stock got killed, and what I did was I got out of the trade, guys. I bought back my puts, and I had a butterfly on targeting this area for earnings, and I just got out of the trade because it was too much risk in there. So lesson learned, make sure you sell your winners at 50% profit. Other stocks in the news, Uber, or not in the news, but other stocks that I'm looking at, Uber really kind of, if you pay attention here, is really breaking out of this. It's doing one of those IPO tricks, right? The IPOs kind of go down for a couple of years and then they head up. This is your classic IPO upside down head and shoulders play, right? Powerful rally up, right? So that's your Uber. Look for Uber to, right now it's flagging. Look for Uber to come back down, and you can get it cheaper, but I love this play in here. A lot of people love Uber right now. So there's lots of option plays that we can do in here. We'll go over to our TOS platform. I think I actually did sell some premium last week. Yeah, I sold 2 of the January 29th 50 puts in Uber. And let's see where that puts me. Puts me, within, if I set my slices to break even on 130, it sets me into 66%. I'm within that, almost within that one standard deviation move for Uber. So right now I'm down on this trade, but I feel comfortable with Uber in here down to that 50 area, targeting, that 50 area would be right around in here, in basically the area of that flag, if you will. So kind of still in that flag formation. What else we got going on? Expedia broke out in here this week, and I wanted to be involved even though I missed Expedia. What did I do with that trade last week? I wanted to be involved in that, so I bought the 137 the January 8th last Friday. I bought the 137 141 144 call fly. I bought 3 contracts. I took a screenshot for you guys to show you because this is part of the educational series that I want to do. This is a classic area where you see the line of magenta here. This is 50% of your max profit. This is when you want to exit your call butterflies or any of your trades, really. 50% of profit. I sold 2 of these contracts for $159. So a couple of things we're watching for next week, or just in general, is again with the EV plays and materials and things like that. We had, looks like Neo just kind of breaking out of that base, and then breaking out of another base up in here on the daily. It broke out last week. So take a look at Neo. We're watching this closely. I don't really follow it too much, so I'm watching Neo. You guys let me know in the comments what you think. Is there an option play in here to sell puts? I don't know. Let's see. Let's take a look at the IV rank. Yeah, the IV percent right here in Neo is fantastic right in here, guys. It's 104%. If you look at my Thinkorswim chart, I actually have the IV percent graphed. But you know what? Right now in here, it kind of looks low. Even though it looks like it's a lot on the chart, it looks like it's low relative to where it has been. But let's look at it anyway, just for ha-has. If you take a look at the single out 41 days with 85% out of the money, that gives us a 79 cent put. It's not a lot for me, so I would probably tend to wait on this one. Let me know in the comments, guys, what you think, where do you think Neo should be to collect premium. That puts you down to $38 level on the trade, right around here. So it's not looking really good to me. I think we need to see what happens in Neo. We need to see it kind of break out and then retest that potentially for a trade in there. We also have earnings coming up on Neo on the 17th. So what I would do is I'd put probably, that's March 17th. We got quite a bit of ways to go for this one. So just watching Neo, um, looking at the gaming plays. A couple guys on the Discord, on the Dumb Money Discord, were telling me about Penn National and DraftKings. I'm looking at both of these. Here's Penn. Honestly, here's my view on Penn really quick. If any of my Discord friends are watching, Penn looks like it's in that ascending wedge. I don't like this area right here. The stock next week has to stay out of this area. The reason why I drew this area, though, at the time was I figured if you enter this area, it's short-term bearish, and you can see the stock quickly move down to that 50-day, and if it breaks there, it goes right down to this level right here, which is previous support, which would be about 61. So if you're going to sell puts on this thing, it needs to stay and grind a little bit higher, stay out of this trouble for at least another couple weeks. We don't have earnings until mid-February, or no, beginning of February. It needs to stay out of this trouble area for a while. I know gaming is hot, but it really needs to stay that it needs to show, instead of chasing it in here, need to show that it can stay out of this trouble area. So I'm a little worried about Penn on a real short-term basis. DraftKings. I really haven't looked at, but it's got a little bit of a really quick. I mean, it's got a little bit of one of these patterns going on. I don't know if I like that so much. So I'll have to watch DraftKings. Let me know what you guys think. If there's anything we should be doing in here, I'd be interested in hearing your comments. Let me just show you a couple of trades that I'm watching, a couple of stocks that I'm watching for breakouts, just like I did with the DDD. McDonald's had a breakout of this trend in here, very strong to the upside. Watch McDonald's. We could potentially see this thing making new highs, or not new highs, retesting old highs. So there's some. I'm liking McDonald's chart in here. So watch McDonald's. Another one that I absolutely love, own, want to buy more of is Under Armour. Under Armour is a show me stock. They benefited, they said they benefited from the pandemic. We're really looking at this area. Oops, I'm sorry. Let's go back to Under Armour. Excuse me. We're looking at this whole area, this rectangle in here. Tremendous upside in here. So little cup and handle forming here. Let me know what you guys think, but I love this for long side. And I would probably be trading Under Armour more for earnings. If we take a look at the earnings are on 2.9, and right now I'm long 200 shares of the stock, plus I have a butterfly that I put on. So I have 20 of the January call flies that I paid 5 cents for, guys. So that 5-cent trade would be, a killer, easily a killer trade in here if Under Armour gets up there. But I'm also long, so I don't anticipate this thing going all the way. But don't forget, you can leg out of these trades, guys. Next week we got the vaccine. The Pfizer says the variant. Looks like their vaccine is good for the variant. That's good news. Biden wants to use 100% of the inventory. These are all good news things. Stimulus. Biden's going to unveil his multi-trillion-dollar plan by Thursday. That means that the Qs will be in question next week. Guys, watch out for those Qs. take a look at some of the IWM, the value plays, get your list together, and because January is going to be interesting. Don't be surprised if we have a pullback. Earnings, again, we're targeting earnings on earnings. Apple earnings are the 26th, right? Amazon the 28th, Google on 2/1 estimated. Again, all my opinion, not stock advice, guys. Please do your own homework and make your own trades. And drop me a note in the comments on what you guys would like to see. We'll be doing some option best practices videos coming soon. So have a great week, guys. See you next week, probably after the close. Take care.